Okay. So we were in which question, dear? Manjusha?
Ma'am, sixth question.
Yeah, you just open that PDF. Sixth question, which transaction, dear? Till second one we finished, I think, right?
Yes,
Am I
ma'am.
right? Okay,
Yes,
fine.
ma'am. Till the second one.
Yeah, that's why. Okay, from third one we will be doing. Okay, am I audible to you now, Janani?
Ma'am, she is not in the class.
Okay, she is rejoining, I think. Okay, fine. Some network issue will be there. Fine. See, depreciation on machinery provided at the rate of 10%. So now what is this depreciation? Depreciation, you can call it as an expense or you can call it as a loss. Kindly write it down, Manjusha, okay? Whatever I'm saying, because these all are new terms for you, right? So what you do, you write as important note. Whatever I'm saying, whenever some new terms come, try to write it down so that when you revise now, it becomes easy for you to understand, okay?
Yes, ma'am.
Yeah. So depreciation is a loss or expense for any business. Now how it is a loss or how it is an expense? On which item we charge depreciation? So always we charge depreciation on fixed assets. Just a moment. Just a moment here. Yes, Janani, can you hear me now, dear?
Yes, ma'am. I'm able to hear.
Okay, dear. Fine, dear. So take page number 9, Janani. We are in third transaction, depreciation on machinery provided at the rate of 10%. We are doing that. Okay. Page number 9,
Okay.
question number 6. So now depreciation is what I said, it is an expense. You can call it as an expense or a loss for any business. And this depreciation is always charged on fixed assets. Now, what is the meaning of this fixed assets? What we understand by this fixed assets? Like land and building, then furniture and fixtures, plant and machinery. All these are called as fixed assets because these give the business benefit for more than 1 year. Now, how these assets are properties for the business. So, how this give benefit? See, whenever business purchases land and building, business immediately does not sell it. It keeps for 10 years, 5 years, 8 years. So more than 1 year it gives benefits to the business. Suppose business is purchasing plant and machinery. Why business purchases plant and machinery? In order to carry out production. Business does production in those goods in which it is dealing. Those goods are produced in factories, then sold to the customer. For that, business purchases machinery. All these are known as fixed assets because these assets gives benefit to the business for more than 1 year. This is the concept. Suppose any asset gives benefit to the business for less than 1 year, then what happens? Those assets are known as current assets. For example, debtors. Who are debtors? Debtors are those person to whom business has sold goods on credit. Now, within 1 year of time, debtors will repay the amount to the business, will make the payment. So that is why they give benefit to the business for less than 1 year. That is the reason we call debtors as current assets. So what you learned, whenever any asset in any particular business gives benefit to the business within 1 year or less than 1 year, those are current assets. Like cash in hand. Whenever business is having cash, immediately that cash can be used. We cannot maintain that cash for more than what? 1 year. For example, I am talking about office. If a cash is available in office, anytime that can be utilized or that can give benefit to the business before 1 year. Cash in bank, suppose bank, the business has deposited cash into bank. Anytime business, whenever in need, can go and take that cash and utilize it. So cash in hand, cash at bank, debtors, stock. Suppose a available stock, it can be sold to customer anytime. It is not necessary more than 1 year we will keep the stock. No, within 1 year we have to sell the stock to the customers. So these are known as current assets because these assets give benefit to the business for less than 1 year. But land and building, plant and machinery, furniture, fixture are all fixed assets which gives the benefit to the business for more than 1 year. It depends on the lifetime of the assets. Any doubt so far? Janani, Manjusha, are you understanding the difference between current assets, fixed assets, how they give benefit to the business and all?
Yes.
Okay. Now we are talking about depreciation here. So depreciation is always charged on fixed assets. Kindly write it down. All these are new to you. It's better to write it down as important note. Make the notes properly. Kindly write it down. So always depreciation is charged on fixed assets. We never charge depreciation on current assets. Write it down. Fixed assets means land and building, furniture and fixtures, plant and machinery. All these are fixed assets. In this we charge depreciation. We means I am again talking about the business. Whenever I say we, it means business. Now, what is going to happen? How to charge depreciation? What is the meaning of depreciation? Suppose I have purchased a machinery. I am a business. I have purchased a machinery today and its cost is 5 lakh rupees in order to do the production in my factory. Okay, fine. Now suppose after 5 years or 10 years when the machinery doesn't work well and I want to replace it, I want to sell it in the market and buy a new one, that is only replacement. So after 5 years will I get 5 lakh for this machinery? No. Even in your home also you can take the example. Suppose you have a TV and that TV it is working for the last 2 years or 3 years. Now you want to sell the TV in the market and you want to purchase a new one. Suppose you purchased before 2 years or 3 years that TV for 10,000, 20,000, whatever. After 2-3 years if you are selling it, will you get entire amount? No. Why you are not getting the entire amount? Because these 2 or 3 years you are using the TV. So whenever we use any asset, fixed asset, value of the asset gets decreased. That is only depreciation. Every year whenever we are using any asset in our business, value of that particular asset gets decreased, and in business we call the term as depreciation. And why it is necessary to charge depreciation? So that after 5 years when the business sells that machinery and purchases a new one, it doesn't face any problem in like arranging the funds, because from now onwards, from the date of purchase, some estimated amount business will charge, like in this question 10%. Then what happens? From the profit every year, that 10% depreciation is kept aside. After 5 years, 6 years, whenever we are businesses selling that particular plant and machinery or any other fixed asset, furniture, fixture, land and building, it in always the value of land and building increases. value of plant and machinery and furniture and fixture decreases. That is only depreciation. So the funds will be ready to compensate the loss. Are you understanding, Manjusha, Janani? What is depreciation? The term depreciation, it is clear to you?
Yes, ma'am.
Yes. What about Manjusha?
Yes, ma'am.
Yeah, fine. So now how to do this? Very easy. What the question tells? Depreciation on machinery provided at the rate of 10%. So now see what is the value of the machinery in your question. Machinery 1 lakh rupees. So now you have to charge 10% depreciation. 10% of 1 lakh you have to calculate. So what amount of depreciation it will come? If you calculate 10%, then how much it will come? The depreciation 10% of 1 lakh, 10,000 I think.
10,000.
Yeah. And what I said, this 10,000 is a loss for the business. Whenever you understand that this item is a loss in accounting equation, what is the treatment? You have to subtract from capital. Whether it is an expense or loss, you have to subtract from capital. What I said, depreciation is a loss. Immediately you have to subtract from capital. Then value of the machinery also decreases. By charging depreciation means we are using one complete year and the value of it is getting decreased due to the use of that machinery. This 10,000 you have to subtract from machinery. Yes, Manjusha? Manjusha, you asked something, dear? Manjusha, can you hear me? Yes? Yes, Janani, am I audible to you?
Yes, ma'am. I think she said she want to go to washroom.
Okay, fine, dear. Okay, dear, fine. Okay. So, now what we are going to do? We are going to subtract this 10,000 rupees from machinery. Wherever you wrote that machinery, that 1 lakh, from there you have to subtract that 10,000. Then you have to subtract that 10,000 from capital as well. From machinery and from capital you have to subtract 10,000 since it is a loss. So you will be subtracting. So now what will be the new equation if we are subtracting that 10,000 from machinery and from capital? Now you have to see the new equation after this third entry. After the third entry, what is the new equation? So cash will remain the same. There is no change in cash. So 61,000 as it is you can write. Plus bank balance 1 lakh. It also remains the same. No change in that. Write it down. Plus stock. Stock also remains the same. 40,000. No change in that. Plus machinery. There is change in machinery. Previously value of the machinery was how much? 1 lakh. And we charge depreciation. So now what is the value of the machinery? 9 lakh. 90,000. If you subtract 10,000 from 1 lakh machinery, it comes to 90,000. Then furniture remains the same. No change in furniture. So plus 50,000. No change in what is the other asset? Debtors. There is no change in debtors. So write as it is 11,000 equals to. So for no liability, write 0 plus there is again change in capital. Previously capital was 3,62,000. From there you have to subtract 10,000 depreciation which we charged on our machinery and it is a loss. That is the reason you are subtracting. So now the capital balance becomes how much? 3,52,000. Till third equation. Any doubt, Janani?
No, ma'am.
Okay, fine. Now next, fourth equation. What is the fourth equation? Cash withdrawn for personal use rupees 10,000. So cash withdrawn for personal use rupees 10,000 means again it is a drawing. Whenever the word personal use comes, it is a drawing for the business. Now drawing has taken place.
Ma'am, am I audible?
Just now you are audible, dear. We are in fourth equation, dear. Okay, third equation finished. We are in fourth. So cash withdrawn for personal use 10,000 rupees. Now this is drawing and you know the treatment for drawing. What you will do for drawings? You have to subtract that 10,000 from cash. Then you have to subtract that 10,000 from capital. So whenever any cash is withdrawn for personal use, that is drawings. And what is the treatment in our accounting equation? We have to subtract from cash and we have to subtract from capital. So this 10,000 you will subtract from cash, you will subtract from capital. Then what will be the new equation after subtracting 10,000 drawings? New equation will be, previously cash balance was 61,000. From that 10,000 drawing we subtracted. Now cash balance is 51,000. Plus bank balance remains the same 1 lakh, plus stock remains the same 40,000, plus machinery after subtracting the depreciation, now the value of the machinery is 90,000, plus furniture remains the same 50,000, plus debtors remains the same 11,000. No change in these, only there is change in cash in asset side. What about the liability side? So for no liability, so you can write 0 plus there is a change in capital. Why there is a change in capital? Drawing has taken place, you have to subtract drawing from capital. This is the rule. 10,000 drawing you will subtract from capital. So now what is the balance of our capital? 3,52,000. Previously capital was there. From there you subtracted 10,000 drawings. Now the available balance capital is 3,42,000. Any doubt in fourth equation? The new equation? Yes?
No, ma'am.
Okay. Yes, Manjusha, have you written till fourth equation?
Yes, ma'am.
Okay. Now we are moving to fifth. What is the fifth equation? Interest on drawings charged at the rate of 5%. What is the meaning of this? Interest on drawing. See, whenever the owner of the business takes money from the business for personal use, that is known as drawings. Now the business will ask the owner to pay interest on that drawings. Now owner will make payment of interest on drawing to the business. This is the meaning of interest on drawing. Now you have to think in this way. Interest on drawing, it is expense for whom? For the owner of the business. But it is income for whom? Business of the, business. Yes, for business, interest on drawing is always an income because owner will pay interest on drawing to the business. Business will receive. It is an income for business. It is an expense for owner. So, whatever income for the business, what we will do? We will add in the capital account. First concept. Any income in the business, we have to add in capital account. Interest on drawing is always income for the business. So, you have to add in capital account. First, you have to calculate. Then you will add. Then, what is the other impact? Now, you have to think in this way. Who is going to make the payment? Owner is going to make the payment. From where the owner will make this payment? Not from his own pocket. He will make the payment from the capital invested in the business. Already he has invested his capital in the business. From that capital only he will make payment of interest on drawing to the business. This is the concept. So, what impact you will have whenever interest on drawing comes in your exam or whenever you are doing the practice questions. Very easy. In capital, first you have to calculate in rough what is the amount of interest on drawings. Then whatever amount comes, simply in capital you just first add that amount, then you subtract that amount. Then the effect will be null only. Adding the same amount and subtracting the same amount in capital, null effect, but still you have to show in this way. So first you have to calculate. For calculation you should know what is the amount of drawing already we have seen in the fourth transaction, 10,000. So 5% interest on drawing, 5% of 10,000. It comes to 500 rupees. What is the treatment in accounting equation? 500 rupees first you add in capital, then this 500 you subtract from capital. So null effect is 0. No increase, no decrease. The same. Any doubt, dear? You are having any doubt so far? Like in fifth, interest on drawing, what you will do? Are you understanding? Janani, Manjusha?
Ma'am, can you explain one more time?
Interest on drawing. Okay.
Yes.
Okay, Manjusha, just you unmute yourself, dear. Can you tell what is interest on drawing?
The interest we're paying for the drawing amount.
Yes, very good. Who is making payment? Interest on drawing, who is paying to whom?
Drawing amount.
Hmm?
Just a second.
Yes?
Drawing amount. From the business.
Yes, Manjusha. Okay, you first tell me, dear, what is drawing? Can you tell me what is drawing?
Expenses made from the business account are drawn on it.
No expenses made from the business account. Drawing means the amount withdrawn by the owner of the business for his personal use. That is only drawing. Drawing means the total amount withdrawn by the owner from the business for personal use. That is drawing. Now, business ask the owner that please pay me the interest on the drawing. Means you have to pay the interest on the amount withdrawn by you from me. Business says to the owner. Now, owner needs to make the payment to the business. This interest on drawing is an expense for whom? It is expense for owner. For whom it is an income? It is an income for the business. Why? Business is receiving extra amount from the owner. If any interest is received by any person, interest is always an extra income, right? When you deposit money in the bank, your account, you receive interest. So that interest is extra amount only. Now you are going to get the amount already you deposited in the bank. Along with that, bank will pay you the interest. Are you understanding? Yes, Manjusha?
Yes, ma'am.
In the same way, the owner has withdrawn money from business. He will repay that amount. The drawing he is going to repay to the business. But along with that, business is going to receive interest. So it's extra income for the business. So income for the business, expense for the owner. So simply don't get confused. Very easy. Whenever interest on drawing comes, first you have to do the calculation. Where you will do the calculation? You have to see the total amount of drawing. In our question, total amount of drawing is already given 10,000 rupees. In that, they are asking to charge interest 5%. If you calculate 5% of 10,000, you get 500 rupees. Now, what is the treatment? Very, very easy. In capital, you have to add 500. In capital, you have to subtract 500. This simple treatment you have to do whenever interest on drawing comes. Now got it? Okay. Yes, Janani, it is clear to you, dear?
Yes, ma'am.
Yeah. Now the next, sixth point. sold goods to Gupta for rupees 10,000. Now what the business is doing? Business is selling goods to Gupta for rupees 10,000. Okay. And received BR. BR means bill receivable. This is the short form. The full form is bill receivable for the same amount for 3 months. Just you understand that BR, that is bill receivable, is an asset for any business. Kindly write it down as important note. Bill receivable, BR, in bracket you can write BR. The full form is bills receivable. It is always an current assets for any business. Write it down. Now what is the meaning of current assets? Current assets means those assets which gives benefit to the business for less than 1 year. Kindly write it down. Janani, Manjusha. All these are new terms. You have to write everything. Okay. Now, what the question is telling, suppose the business is selling goods for rupees 10,000 to Gupta. So, Gupta, he is the person to whom business is doing the sales. Now, Gupta is not making any cash payment. Gupta is not immediately paying the cash to the business. Then what Gupta is doing? In a piece of paper, Gupta says that I agree to make the payment of rupees 10,000 to you after 3 months. That is only bill receivable. It is a legal document. Okay, bills receivable is not a joke. It is a legal document. So suppose Gupta doesn't make the payment to the business, business has the right to show it in court and file a case against that Gupta. So it is a evidence that Gupta has agreed to make the payment after 3 months. Bill receivable is a legal document. That is why after 3 months Gupta says I will make you the payment. Not now. Now I am not having the cash. So sell me the goods, but after 3 months definitely I will make you the payment. Understood? Manjusha, Janani, what is this bill receivable? It is clear to you?
Yes, ma'am.
I hope you both of you are writing everything. So now write it down. Bills receivable is a legal document. It is an current asset for the business. So when I am saying all these terms, what you are understanding? Where you have to show this bill receivable. If it is an current asset, it is an asset. So one more asset has been created. Okay, that is debtor. You can write debtors or you can write as bills receivable. Both are same. Gupta, he is our debtor who has signed in a piece of paper that he will make the payment after 3 months. You can write as debtor, DEBTOR. Debtor is also an asset. Instead of debtor, you can write it as BR, bills receivable. Both are correct. Whichever you want, you can write. Both means the same. After 3 months, Gupta will make the payment. It's a debtor, it's an asset. Understood? Okay. So from stock, how much you are going to subtract? How much goods you have sold? 10,000 goods you have sold. So 10,000 rupees you have to subtract. From where you will subtract? From stock. And 10,000 you will add in bills receivable. BR, one new asset you have to create. Sorry, actually I am really sorry. You should not write that debtor. Debtor is a different thing. Bills receivable is a different thing. Debtor already we did in that second transaction. I think that 11,000 half payment and all. You have to write only bills receivable. Don't write debtor, please. BR is an asset. Write properly BR. It is an asset. Add one more asset. Simply write plus BR in asset column, and below that write 10,000. One asset has increased and goods cost 10,000 subtracted from stock. Got it?
Yes, ma'am.
Okay, fine. So now what will be the new equation? Cash balance will remain the same because there is no change in cash. We are not receiving anything because debtor has created, Gupta is a debtor, but he gave us the bill receivable, which is an asset for the business. After 3 months only we will receive cash. So cash balance remains the same 51,000. Bank balance also no change 1 lakh. Plus there is a change in stock. We have sold goods for 10,000. So you can subtract 10,000 from our stock. So now the stock balance is how much? The current stock balance. It is 30,000. Okay. Current stock balance is 30,000 rupees. And what about the machinery? It is 90,000 the same. What about the furniture? 50,000. What about the debtors? 11,000 plus bills receivable. One more asset increased in our business 10,000 equals to, so far no liability in our business. So in place of liability you can just write 0. And what about capital? Capital also remains the same. No change in capital due to this transaction. So in each and every transaction, you have to learn what is the treatment and where the impact is. This is what you are learning so far in each and every transaction. So in capital, no change. As it is, you have to write. What will be the capital? 3,42,000. The same. Capital remains the same. Any doubt, Janani, Manjusha? Any doubt you're having?
No, ma'am.
Okay. Now we are moving to the next transaction, that is 7th transaction. Received rupees 10,000 from Gupta. Now what is happening? 3 months over in business. After 3 months, Gupta, he is our debtor, or you can say that bill receivable. We wrote bills receivable, BR we wrote as an asset. We are receiving how much? 10,000. He paid us 10,000 to the business. Now what you have to do? So whenever the bills receivable, it is a legal document, it is an asset we have shown in our business. Now we received 10,000 from that asset. So where you will show that 10,000? Obviously in cash. Cash is increasing 10,000. At the same time, you have to remove that bill receivable from our account. So you have to subtract 10,000 from that bills receivable. Why? Bill receivable, it represents the debtor, Gupta. Already he made us payment. He make the payment of 10,000. If you don't remove him, then again he needs to make the payment, which is not possible. Once the debtor makes the payment, nobody is going to pay you again and again. So now no more debtor. He remains no more debtor for you. He already made you the payment. So you have to remove from books. How you will remove? You have to just subtract. So BR 10,000 already we have shown. From there you have to subtract 10,000. Any doubt in this particular transaction? Janani, Manjusha, are you understanding why we are subtracting BR? Why we are adding 10,000 in cash? Yes?
Yes, ma'am.
Yes, ma'am.
Yeah. Now what you are going to do? Now you are going to write the final equation. Why you are going to write the final equation? Because after 7th there is no more transaction. So FE, that is final equation. So if you see the cash balance, previously it was 51,000. Now you have added 10,000 cash. You received from Gupta that BR. So cash of the business increases. Now it is 61,000. Cash balance with business 61,000. Now what about the bank balance? It remains the same 1 lakh. Plus stock 30,000. Plus machinery 90,000. Plus furniture 50,000. Plus debtors 11,000 plus BR 0. BR cleared. No more BR. Equals to liability 0. Capital 3,42,000. If you add asset side, you will get 3,42,000 only. This is only accounting equation. Assets equals to capital plus liability. Always this equation will tally if your question is correct. So after each and every transaction, you can check whether both the sides are equal or not. If after each and every transaction it is not tallying, means you did some mistake, you have to identify and rectify it. Understood, Manjusha and Janani?
Yes, ma'am.
Any doubt in this question?
No, ma'am.
Okay, I hope you have written clearly. At home, kindly practice these questions. Please practice 2 times, 3 times yourself. Unless and until you are able to solve it, you have to practice. No option, because accounts is a subject which needs full of practice. Unless and until you pay attention, we can't do anything. You have to work hard. You have to practice. The more you practice, the more you become perfect. Okay, now we are going to do next question, that is question number 7. Started business with cash rupees 1,50,000. So be ready with this format, dear. Prepare a format. Now Janani, unmute yourself and tell me, dear. Started business with cash rupees 1,50,000. Tell me the impact.
Under cash, it will be 1,50,000,
Okay.
and under capital, 1,50,000.
Very good. So write it down. Janani, Manjusha, kindly write it down. Now the next transaction Manjusha is going to tell me. First write the first transaction. The second. Just unmute yourself, Manjusha. Opened.
Ma'am, in the
Yeah, second. You read yourself and tell me. Okay, fine.
opened a bank account by depositing 25,000 rupees out of cash.
Yeah.
So subtracting 25,000 rupees from cash and adding another asset, bank, and adding 25.
Excellent, Manjusha. Now can you explain why you are subtracting from cash and why you are adding one more asset bank? Can you explain the concept?
Ma'am, because we're taking the money from our current asset, which is cash, and putting the cash in another asset, the bank account.
Excellent. Very good. Janani, Manjusha. Both of you good. Okay. Now the third, Janani, come on. You have to tell me, dear. You read the question and tell me. Explain everything nicely.
He sold his personal car for 50,000 and deposited the amount in the firm bank account.
Yeah, what is the meaning?
So in bank, it will be 50,000.
Okay, very good. That is correct.
And in capital, it will be added.
You are right, but you are right. Yes, you are right. In capital, you will add 50, and in cash also, you will add 50. How much? 50 you will add. Yes. You tell
Yes,
me, dear Janani.
Yes, ma'am.
Yeah, you are saying no. You are saying that in bank you will add 50 and in capital you will add 50. That's what you are saying, right?
Yes, ma'am.
Can you explain why we are adding in bank and why we are adding in capital? There should be some logic.
Because he sold his personal car and then he deposited that amount in the bank.
Okay, that's right. You are right, dear. But by selling the personal car, it was his personal asset, not business asset. Then whatever amount he got, like 50,000, he is depositing in his bank account. Okay, fine. You are right. That's the reason it is we are adding in bank. What about capital? Why you are adding in capital? You said right, don't get nervous or like that. Capital you have to add. I just want to know what is the logic behind it. In capital, why you are adding 50,000?
Because when bank the amount increases, capital also increase.
Yes, you are right, but there is a logic. What is that logic? He is making additional investment in business. Okay, meaning of this is by selling personal car, whatever cash he is getting, he can take that to home and use it for his personal use, personal expenses. But he is not doing like that. He is bringing that cash and investing in business. So the meaning, like in the beginning, whenever you start any business, you invest capital. So once the business started, during the year also, if the proprietor, owner of the business wants, he can do additional investment of the capital. Here that is only happening. He want the capital to be more so that he can expand his business and earn more profit. That is the reason what he is doing. He is selling his personal asset and not using that money for personal use. He is investing in business, and we know whenever any capital, additional capital invested, the same logic, cash will increase, capital will increase. This is the logic behind this. Understood? Got it, Janani?
Yes, ma'am.
Yeah. What about Manjusha?
Yes, ma'am.
Very good. Now Manjusha, it's your turn, dear. I hope you are writing everything, both of you. Write it down simultaneously. Now you are in which transaction? We are in fourth transaction. Yeah. Tell me, dear.
He purchased a building and furniture for 1 lakh rupees.
Yeah.
So 1 lakh rupees will be subtracted from the cash, while new asset of building and furniture will be added for 1 lakh rupees.
Very good, Manjusha. Without going to school, without attending a single accounts class in your school, what miracle you are doing, dear Manjusha? Very good. You didn't attend even one class in your school, right? You didn't join.
Yes, ma'am.
Very good. Well done. Keep it up, dear. Good.
Thank you, ma'am.
Okay. Now, Janani, it's your turn, dear. Fifth one, I think, right? Yes, fifth one. Read the transaction, explain and tell the impact.
He purchased goods from Ram on credit, rupees 50,000.
Very good. Now tell me the impact.
So the debt will be 50,000 and for creditor it will be 50,000.
What? What you are saying for creditor 50,000? Okay. You are saying debtor? Yes.
Yeah.
How debtor, dear? How it will come debtor? Whenever you are, suppose you are purchasing goods, okay? If the business purchases goods, creditor will increase and stock will increase, na dear. Why debtor will increase? Whenever the goods are sold by business on credit, then what will happen? Then debtor will increase and stock will decrease. Here what is happening? Business is purchasing goods on credit. From whom? Ram. He is our creditor. So later on business needs to make payment. So creditor you said correct. One liability is increasing in this transaction 50,000. And since we are not paying any cash, so you cannot reduce cash. But what is coming into the business when you purchase goods? Stock is increasing. So you have to increase the stock by 50,000. Then what you will do? You have to add one creditor. Okay, by 50,000. Got it?
Yes, ma'am.
Yeah. New equation and all I hope you are doing, right? Janani and Manjusha, are you doing yourself the new equations?
Yes, ma'am.
Yeah. Simultaneously do the sum, listen and do it. Don't sit idly. Okay, fine. Now the sixth transaction. Yes, Manjusha, tell me.
Yes, ma'am.
Yeah.
What is this word, ma'am?
Cartage. C-A-R-T-A-G-E. He paid cartage rupees 500. He means we are representing the owner. Cartage means transportation cost. For example, the business will purchase goods from wholesaler or from any shopkeeper. Then it will bring to the godown. For that the business needs to pay the transportation cost, that is known as cartage. Now can you tell me?
Yes, ma'am. He paid cartage of 500 rupees.
Yeah.
So 500 rupees will be subtracted from the cash.
Okay.
And the capital.
Now can you explain why we are subtracting from capital?
Because whenever money is added or subtracted from the business, both the cash and the capital, the amount would be subtracted from both the cash and the capital.
Okay, actually the logic is, see the logic, whenever any expenses happens in the business, Transportation cost is an expense for the business. Okay, so that is the logic. Whenever any expense is taking place in our business, we subtract from capital. Whenever any income is coming in the business, we add in capital. That is the logic. That is why you are subtracting 500 from capital and from cash, because when you are making payment, cash is also reducing. Understood?
Yes, ma'am.
Yeah. Janani, tell me dear, the seventh one.
He sold to Shyam on credit goods on credit costing 6,000 for 9,000.
Very good. Now explain dear. Yes, Janani. Don't see that PDF answer dear. Even if you say wrong, it's no issue. I will make you understand. I want to know how much you are understanding, whether you are practicing at home or just coming to class. Both of you, not only for Janani, including Manjusha. That's the reason I'm asking. So don't see that answer and tell me. I don't want that. If it's wrong, I won't say anything. I will explain you. So whatever you feel, you just explain, Janani.
I understood the credit, but I didn't understand the 6,000 and 9,000.
Okay, fine. No issue. I will make you understand. No issue. Manjusha, you want to try or you don't know?
When can I try this?
Okay, try. No issues in trying. Come on, try.
Yes. He sold to Shyam on credit goods and on credit costing 6,000 rupees for 9,000. So he sold goods worth 6,000 rupees for 9,000.
Yes.
And since it is in credit, so it will become a liability.
See, just a moment dear. Whenever we are selling, we means business is selling any goods, asset will create. Debtor, not liability. When business purchases goods on credit, then liability will increase. Whenever business sell goods to customer on credit, asset will increase, debtor. Okay, don't get confused. Yes, Manjusha, are you understanding? Here the owner is selling the goods. Suppose you are the business, Manjusha, you are selling goods to me, I am your customer. So how I will become your liability? I have to make payment to you in future. So I will become your asset, right? I will become your debtor, not your creditor. Who is creditor? Creditor is a person to whom business needs to make the payment. Debtor is a person from whom business will receive the payment, and creditor happens only on purchases, credit purchase, and this debtor take place when the business sell goods on credit to the customer. I hope now it's clear that creditor debtor concept. Yes, Manjusha?
Yes, ma'am.
Okay. So now what you have to do, see, now business is selling goods. What is the cost price of the goods? 6,000 rupees. So you have to subtract from your stock. Stock will get reduced. So just subtract this 6,000. It is the cost price. And you are selling for how much? 9,000. But again, 9,000 you are not getting. So cash will not increase. Why you are not getting 9,000? The question says, Shyam is a person to whom business is selling goods on credit. You are not receiving any cash when you are selling the goods on credit. So cash will not increase, but stock will get reduced by cost price 6,000. Then what you have to do? What one more asset is increasing if goods are sold on credit? Debtor is increasing. Shyam is our debtor. Now Shyam has become our debtor for the business, and debtor is always an asset. So one asset you have to add, debtor. And how much debtor? How much Shyam needs to pay to the business in future? 9,000. So below debtor you have to write 9,000. And what other, whenever this type of transaction comes, it is very important, first thing from exam point of view. Second, in this type of transaction there will be always 3 impact. So write it clearly, important transaction, 3 impact. Now what are those three impact? First impact, reduce from stock, always cost price 6,000. Then since goods are sold on credit, increase one asset, debtor. How much debtor needs to pay? 9,000, the selling price. Then if the goods are sold on cash, then what you will do? You will increase the cash. There will be no place for debtor. Try to understand it. By practice only you can understand. Then the third, 6,000 goods you sold for 9,000. How much profit the business earned? 3,000 rupees. If any profit in the business, you should add in the capital. Then in capital add 3,000. So 3 impact in this particular transaction. Is it clear or still having any doubt that debtor, creditor, both of you are getting confused? So any doubt, dear? Okay. Janani, Manjusha, write it down as important note because you are getting confused. Debtor is a person. Kindly write it down. Debtor is a person to whom the business sells goods on credit and receives the payment later on. Again, creditor is a person from whom business purchases goods on credit and makes the payment later on. Kindly write it down. I will give you time, no hurry, but you have to write everything.
Can you say the creditor?
Yeah, creditors are those persons to whom business needs to make payment as business has purchased goods from them on credit. These are the accounting terms. Write it down. Janani, are you writing, dear?
Yes, ma'am.
Okay, dear. What about Manjusha?
Yes, ma'am.
Okay. Now the next transaction. Janani, tell dear. Received rent from tenants 1,000 rupees.
Under cash will be 10,000.
Very good.
And under rent will be 10,000.
No, dear. Actually, what is rent? Suppose interest received. Okay. Rent received. What are these for a business? Think you are a business. You are receiving extra income. Na? What is your work? As a businessman, you have to sell the goods to customer and earn profit. In which you are dealing, that goods you will be selling. But now you are receiving some extra income. For example, interest received, rent received. All these are extra income. So whenever any income is received by the business, it will increase in the capital. You have to increase the capital. Whenever income is received, you have to increase in the capital. So this rent received is an income for any business. That is the reason in capital you have to increase 1,000 rupees. And since rent received means cash is coming into the business, one asset is increasing. In cash you will add 1,000. In capital you will add 1,000. The logic is whenever you receive something like rent received, interest received, cash is coming. So you will add in cash. Why you are adding in capital? Rent received, anything received, it is income. That is why we are adding in capital. Understood or still having doubt? Janani, Manjusha?
Understood. Yes, ma'am, I understood.
Very good. So I hope till here you all wrote. Kindly write it down, dear. Till here everything. All the important notes, everything write it down. Today we will keep till here because it is a long question. Still how many transactions are there? The last transaction 14. So in the next class we will continue. Till here send me, kindly send me all the important notes what you wrote during the class as well as the accounting equation. Till 8th. Till 8th today we did. From 9th next class Thursday we will be doing. Is it okay?
Yes, ma'am.
Till here you kindly
Okay.
practiced here. Till here please practice each and every question in PDF. And what about the T.S. Gerewal? Yes, Manjusha, are you having that book, dear?
Yes, ma'am, I have the book with me. My sister had it, so it's still there.
So have you started practicing? These are the practical questions, dear. Kindly practice.
Yes, ma'am. I haven't started yet. But
Incoming voice call from Muniratnam Iron Shop near Piliyar Temple.
Okay.
Incoming voice call
So
from
fans,
Muniratnam
that's all
Iron
for
Shop
today,
near
dear.
Piliyar Temple. Incoming
you,
voice
ma'am.
call
Yeah.
from
Thank you.
Muniratnam Iron
Thank you,
Shop
dear.
near Piliyar Temple.
Thank you, ma'am.
Yeah. Good night, dear. Thank you.
Incoming voice call from Muniratnam